Hello and welcome everyone to another weekly market commentary from StashAway. With us, of course, our Chief Investment Officer, Freddy Lim. Hey, Freddy.
Hey, Philipp, are you in Dubai now?
I sure am in Dubai at the moment. First time being on a plane was quite interesting, but yeah, everything worked out quite smoothly for now.
Fantastic.
Well, hey, we do have quite a lot of things to discuss. We are 1 week out from the election. I do need to get some to-dos out from the team. So before we get into that market commentary portion, I'd like to invite everyone to subscribe to our podcast. It's called In Your Best Interest. The link is in the description below. You can also go to stashaway.com/podcast or find it on any of the big providers like Spotify and Apple Podcasts. Because in our latest episode, we talked about managing finances as a couple, and I was joined by Jennifer Pedriglieri. She is an associate professor of organizational behavior at INSEAD, and she shared why it's so important that you and your partner manage your money as a team. So I'm sure everyone that's listening to our weekly market comedy would really like our podcast as well. There's a few episodes with Freddy in it. So Freddy, right? You've been on there. And I think it will be a good complement to our weekly market commentary. So have a listen to that. Again, description is below. Freddy, we're getting to 1 week out, right? You and I, we've been discussing the last couple of weeks, Mnuchin and Pelosi were trying to get a deal done for stimulus package. That seems far out now, right? With the election coming so close now.
Well, even in the first place, the hurdles are just really, really high because even if they actually have a deal by miracle, the deal has to go back to the Republicans-dominated Senate for approval, where they would most likely reject it anyway. There's a fundamental great divide in how the two parties view the size of the stimulus package and even the components of the stimulus package. So the fact that they even broke down before that and started trading brains among themselves says a lot about how difficult it is.
Yeah, no. And with the election 1 week out, is there any update from your side? What you're seeing? What's the market pricing in? It seems from the news at least that Joe Biden is taking a lead, and even like in some of the states that have historically been Republican, it seems pretty close now, right?
Yes, but history has taught us not to place too much faith on polls. We had Brexit. We have Donald Trump winning the last election against Clinton. You just never know. And there's also the possibility that a contested election is not a remote possibility, right? You have 3 judges already being nominated by President Trump in the Supreme Court, leaving another 6. And you never know, there could be some dealing where Trump offer abortion laws, something that the rest of the judges really believe, and to sort of win them over. You just never know what will happen if the Supreme Court comes into play to decide to have a role in the elections. So investors should always just, from day one, when they invest, you should always get the risk right, always prepare for all these events, and always take a diversified approach to things.
Yeah. One of the big things also is the COVID-19 situation in Europe and the US, right? It's obviously been going through the roof in multiple countries in Europe. I think we're looking at partial lockdowns already. It's looking like there might be some more out there. However, there's progress being made on vaccines, right? I know right now it seems tough to think about a better time ahead, right? But especially with these rising cases. But where do you see the vaccine progress, and what does that mean to portfolios?
Actually, I would talk about the vaccine progress plus testing progress, because both can be surprising to a lot of people in terms of changing the current situation. So let me start with vaccine. So we've heard Johnson & Johnson, they had a pause on their trials, and that was a big deal in the media. A pause is actually not the same as a clinical hold, where effectively the regulators come in and stop the entire process and experimentation because something really, really serious went wrong, and it would take a long time to reboot that. But that's not what happened. Now, but that also, those pauses have left two major companies in the run, and that's Moderna, and the other one is the Pfizer-BioNTech combination. Both are different approaches, but both are very exciting. The later ones, the Pfizer-BioNTech ones, involves RNA, the genomes related sort of techniques that for the body to induce the body to produce vaccines. Whereas the traditional techniques are you sort of need to grow a vaccine in an egg for a year under minus 70 degrees Celsius. So it's a real innovation. So only time will tell whether this will progress to the point of being, essentially it's a 3D printing of vaccine. So it's printable. So this is one of the stuff that we are watching. But on the other hand, vaccine or not, we also have better testings that can reduce the lag time in getting a result. Imagine if you can reduce it to 24 hours or even 2 days, the amount of quarantine also as a result would be reduced, right? So that would free up some mobility and some traffic. So that's potentially a pipeline of reasons why there could be a positive surprise on those fronts. And it's not a small risk that investors should start preparing for something called a sector rotation, where we know that technology firms have done very well in the pandemic, but there can be a reversal of fortunes, right? Beaten down names can suddenly come to life. So that's what it means to be in a sector rotation situation. So it's not just election; there's also other positive surprises in the pipeline.
Yes, and I think when times are at the worst, that's usually when things start to improve, because they do come out of nowhere then. Freddy, we also got a question from one of our listeners based on last week's video. Let me read that out to you. For everyone else who wants their questions featured on our weekly market commentary, please feel free to put them in the comment section below, and our team will pick them up every week. He's asking, hey Freddy, will StashAway revisit the allocation percentage of gold in my portfolio? I realized my performance is not progressing, mainly due to the gold performance. Perhaps when I entered the market during August time, when the gold was sitting at extreme highs. That's one question. And then just to discuss is if 20% allocation of gold is considered high or low. Will StashAway look into that?
Well, let me step back a bit and retrace our steps since December 2017, because that's the first time we went full allocation on gold, 15%, when it was trading at 1,240. We went as high as nearly 2,000, and now we came back down to around 1,800, right? So it goes to show that think about how long-term we have been doing it, what amount of gains we have had over the years. So so the main point I'm trying to make is it's a long-term strategic decision. In the first place, we had it where back then was because of valuations being depressed at 1242. But today, the reason of having it is because ERA is virtually gone into an all-weather strategy mode in view of the massive amounts studying down the pipeline. You had the election that's very bipolar. Can result in a lot of policy regime changes. For example, the election could lead to a democratic sweep of both chambers of the Congress, and that means a much larger fiscal stimulus can happen after the elections. That also more money being printed, US dollar depreciate further. That is the risk that the gold allocation would have addressed. Also, market volatility, gold is a protective asset, addressed it too. So it's really not about return alone. It's also about risk management and the economic uncertainties that we are confronting right now. There's a lot of reasons why this is happening. Why is 20%? If it was up to me to point out that, 20% seems too high, or 5% should be the right number, then what's the point of having a systematic approach? And the allocation of 20% is actually based on all these risk factors and the optimization that goes on to say we need to protect investors' money. We need to protect investors from what? From a dilution of paper money because of massive money printing, like unprecedented amounts has been seen. We're in unprecedented times, so we have unprecedented allocations. Now, right. just to pin it down further, being invested in mid-August, for example, the gold price itself is down 1.96%, so you're down 2% on that. But its function is not about return. Not every line item on the portfolio should have a return. Its function is primarily for risk management and paper money dilution risk management too, right? So there's a lot going on when constructing a portfolio, and I would sort of you need to take a very holistic approach. And I wouldn't even let me get in the way of the allocations. So again, unprecedented times, unprecedented allocations. That's the way it is. It will change when, like I said, the vaccine came in, or the sector rotation came in, or when the uncertainty about the new policy regime after the election clears out, right? Things change over time. The algorithm will move again. But for now, it's really not about return. It's about risk management.
Absolutely. Thank you, Freddy. Thank you for the listener for the question. I think that was quite interesting as well. We also have some great webinars coming up for the Singapore market. We have What's Your Financial Plan B? So this is where you learn about anything that might happen to you from an accident, and how you can protect yourself and how you can protect your financial plan. That's on the 5th of November, Thursday, 7 p.m. If you want to sign up, the link is in the show notes below, as well as on our website. Also, for Malaysia, we have another webinar. It's called How to Plan for Your Retirement. So if you're interested in learning more about that, it's on the 4th of November, 6 p.m. And again, show notes have the links, as well as our website. We'll be back with you all next week, which will probably be right after the US election. So we'll have probably a lot to talk about next week, Freddy. Until then, stay safe, everyone, and we'll chat to you soon. Goodbye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.